be going over some live mortgage rates for a few different programs. Then we're going to be doing a deep dive into second mortgages, HE loans, not HELOCs. We're going to be talking about HE loans today. We'll wait just a minute here to get started. Let everybody tune in. Let us go live on all the different platforms. So bear with us for just a moment here. We did put the chat up on the screen, so feel free to drop a comment there in the chat as you tune in. I see some people were already tuning in nice and early and dropping comments. We appreciate that. We'll get started here in just a moment. Hope everybody's been having a great week so far, ready for the holiday tomorrow and holiday weekend this weekend. And it looks like we are live on all the different platforms, so we can go ahead and get started. We'll take the chat off the screen, but keep dropping comments there in the chat, and you can drop any questions you have in the chat as well as we go through our deep dive topic here for today. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on the show at 11 a.m. Eastern time is go through some live mortgage rates for different programs. And then we do a deep dive into a different topic each day. Today's topic is going to be second mortgage HE loans. So we're not talking about HELOCs, not home equity lines of credit. We're talking about an actual second mortgage, a HE loan. So our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, is going to do a deep dive into second mortgages here shortly. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and go through the rates. So Nick, if you're ready, let's pull up our pricer and see what the market is looking like this morning.
All right, let me switch my screen and we'll check it out. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is November 22nd, last day before the holidays here. We won't be doing the show for the next couple days here. But we will set up a scenario with the same loan amount and characteristics so we can compare across the programs on the APR. If you'd like a full breakdown of all the fees that go into that, please get with one of our licensed loan officers and you can get a full loan estimate. We have over 400 loan officers in 24 states. So for the demos, we'll set the same scenario to compare programs. We'll set $400,000 loan amount. We'll set an LTV of 80% loan, 20% down payment. We're going to have the computer find the absolute lowest rate we can offer. And we'll compare our different programs. Today, we're just going to check out conforming, conventional, and expanded guidelines non-QM. FHA is giving me a little trouble here. VA is only for eligible vets and active service members. If you are eligible, just let us know. We can quote it, no problem. But since not everybody is, we don't do that live. And same with properties under USDA, properties must be eligible. So if you do happen to be looking, just let us know. But since not everybody is looking at a USDA eligible property, we don't always do that live. So we'll start with conforming conventional. We'll do a purchase, 30-year fixed, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. For all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio here of 40%. So with these settings, let's check out the conventional options this morning. All right, cool. Went down just a touch, which is great. We love to see it go down. So today, best option, 6.625 rate for 2.5 discount points. And finally, under 7 APR again. So just a touch under 7, 6.929. So definitely good news as we continue to go down. Remember, just a few weeks ago, we were up into the 8s almost here on a primary scenario. So definitely some good options. Now, if for any reason our customer doesn't qualify for a conventional full doc program, we might want to check out FHA. That's not working right now on the live pricer. But what we really love to check out is if our customer doesn't qualify full doc for FHA or conventional, we love to present our expanded guidelines, also known as non-QM, where we have over 5,000 additional options where other banks or lenders may not have any other options besides FHA and conventional. So we'll set up the same scenario here. Everything will stay the same, except now we can choose a new income type. So if our customer doesn't qualify for full doc, which is what we use for conventional FHA, all the other loans. That's 2 years of tax returns. We'll typically choose one of these non-QM options to take advantage of one of these other income types. We have shows on all these different types: asset-related programs, business bank statement programs, our investor DSCR programs are just for investment properties. Personal bank statement 12-month is what we use for the demo. That's the most popular. We also have RSU, stated, VOE, 1099, P&L, no income, CDFI we did yesterday on the show. For the demo, we always use the 12-month personal bank statement, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they're submitting 2 years of tax returns, are typically going to be the ones that may have some issues and may need a little extra help to qualify and get the income they really want. So we will do that using no tax returns at all, just their last 12 bank statements to determine a debt-to-income ratio here of 40% in our example, but using just their cash in the bank, no tax returns involved at all. So most of our self-employed borrowers can qualify when they would otherwise not using this program. So let's check out the bank statement options this morning. All right, cool. Bank statement went down a little bit too. We'd love to see that. 7.5 rate, 2.25 discount points at cost. Final APR 7.910. So almost 1 point difference here. At one time, bank statements were beating conventional, but as conventional goes down, here this is more of a normal market. So a little bit of extra cost, not even quite a point, which is amazing for our borrowers that need to use these programs. They're definitely amazing programs. And as we scroll down here, there's tons of different options. Some of these have a little bit higher rates and costs, may allow bankruptcies, foreclosures, other issues to come up and be cleared. And they also may allow us to use different ways to calculate the income on the bank statement. So please get with our team. There's dozens, if not hundreds of variations here under these programs. And let me get back to the pricer here. And we always want to do some live rates for investment properties for our show. So we will compare investment property scenarios with the same setup: 80% loan, 20% down payment. I'm going to look for the absolute lowest rate. And again, we'll compare our conforming conventional with our non-QM programs. Remember, none of the government programs allow investments, so no FHA, VA, or USDA work for investments. So we'll stick to these two here. Conforming conventional, we'll start with. Everything else is identical to all our other demos. All we've changed here is the occupancy to investment. So let's check out the investment property options today. Hopefully it's gone down a touch. Yep. Also went down a touch here. So best option, 7.374 rate for 3.125 discount points and cost. Final APR, 7.766. Definitely been well over 8 for investments. And remember, for investment properties, we have that unique portfolio program, which was beating it by a substantial amount. But now you see, as we scroll down the list, our portfolio option keeps going down. It stays about the same price while the conventionals go up and down with the market. So the portfolio option is sticking right here around 8, whereas now our conventional options are much lower here, 7.766. But keep an eyeball on that portfolio program because it's not as volatile, right? We love those options. And for our final demo, we'll do our non-QM investment properties. So most of our investors would like to see a non-QM option, in particular the most popular loan program right now for non-QM for an investment property is going to be our DSCR options. This is our most popular loan by far because it doesn't require any income or employment from our borrower, no employment or income documentation from our borrower. Simply use the estimated rents to determine a DSCR value. Stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1.0 or higher. Even if the property doesn't cash flow, that's a ratio of under 1.0. And we still have options for that. For the demo, we put 1.5 as the highest value so we can see all the programs. And finally, prepayment penalty must be selected. We can choose 0 if we'd like, that will cost more. We could also choose 5 years, which will cost less, but those will limit the loan programs. 3 years is standard. That will show the most amount of eligible programs. So that's what we want to use for the demo here. So let's check out the DSCR options today. All right. Looks like it went up just a touch from yesterday, but 7.625 rate, 3.125 discount points at cost, final APR of 8.136. So very comparable rate here. We're within, I think it was about 0.3, 0.4 of conventional, which is absolutely amazing. Most of our investors still choose DSCR programs for the flexibility, even when the difference is multiple points, which is more typical. And in today's market, DSCR was beating conventional for a little bit there. And today it's just a very comparable cost. So most investors prefer these programs. And there's tons of options as well. As we scroll down, some of these at higher rates of cost may allow bankruptcies, foreclosures, other types of issues. And some of these may allow us to use different types of calculations, short-term rental calculations, may allow us to use different types of properties, such as our 5 to 8 units, our condo hotels, all of our special shows that we've done in the past. So please check out those options and some of the past episodes that we've done. And let me change my screen again. We'll get into today's topic. So today we're going to be talking about one of the newest programs that's out. We always love doing these new programs, and they're fixed rate second mortgages. So HELOCs obviously have always been out there and been popular. Fixed rate second mortgages, pretty new, and definitely a lot of flexibility, which is what we love here, right? So we have a ton of flexibility within these new second mortgage programs. So Jose, I'm sure, has a couple tricks up his sleeve here for different income types that we can use, which is typically not possible for HELOCs, and some other options such as investment property options for second mortgage, which is typically, again, not available for HELOCs. So HELOAN, different flavor. Jose, if you want to go through the main differences one more time, and then we'll check out some examples here.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Yes, let's make a quick distinction between what we are referring to. HELOAN is a closed-end loan, right? It's a closed-end second mortgage, has a fixed amortization and a fixed rate, right? So a HELOC, on the other hand, is an open end mortgage, and it is usually a variable rate, and it is you are going to pay based on what you owe. So HELOC variable rate can go up, can go down, but keep in mind there's usually going to be a floor rate even on a HELOC. So don't think just because you're getting a variable rate based on an index that if the index drops to 0.5%, for example, that your rate's going to drop to 3.5%, depending on your the index plus the margin. There's going to be a floor rate, usually going to be around what your start rate was. So keep that in mind when you're looking at a HELOC versus a HE loan. Now, the HE loan rates are lower, currently lower, and we do have some pretty interesting options for HE loans, including a very special option that I will be showcasing at the end of our show. So I do have a bunch of cash out options for you to share for primary and investment properties as well. So let's jump right into it. So our first example here is full doc, right? So remember, this is our closed-end second mortgage fixed rate. These products are very competitive now in the industry, just like DSCR and ITIN loans. A lot of money, secondary money, is pouring into HE loans. It's all the rage, I guess you could say, with a lot of our secondary investors out there. They love it, especially with so many people that have low interest rate first mortgages that may not want to touch that first mortgage. HE loan is a great example. So this one right here is the maximum LTV, 90%. So it's a 90% CLTV max on this loan. and you're looking at 12% is par, and you can buy that down to 10.75, costing 2.5 points. Now, to show you the difference between taking it to the max and something a little bit more in line with the norm, here's an 80% LTV, same exact product, same scores. The only difference is just we're going to 80% instead of 90. So you can see now we're 9.875 is our lowest cost option, and quite a few buy down options there. Based on our loan amount, we still have to run a compliance test. So I'm not sure if this 3.125 cost will work, but with our 800 credit score borrower, I think we may get some bona fide discount points here. And now with a bank statement, and these first options I'm showing you are all for primary residences. So now our maximum LTV on the bank statement option, primary, is 85%. And very good options here, 12.75, almost at par, and buying that down to 11.375. For our bank statement option, 85% CLTV. And now we have a 1099 option. Yes, we can go 1099 on primary options, 80% CLTV max, but it is an option. So 13% is our lowest cost option, and 12.75 lowest rate option. And now we have a profit and loss option, and it didn't populate, so I'm so sorry about that. Second mortgage, 12-month investment cash out here. So we have a cash out 80% CLTV investment property. The primary was 85%. The investment, as is usually the case with an LTV reduction, in this case 5% LTV reduction. So we can still do 13% as our lowest cost option and buy that down to 12.125%. And our investment profit and loss option, maximum LTV is 70%. For our primary, it's 80%, even though I didn't give you a rate. This one, the max is 70%. And again, we would definitely want to run this through our compliance test to make sure that the 3-point cost, which was the only option available, by the way, the only compliant option, but still we'd want to run this through a compliance test to make sure that 3% is fine. And DSCR, yes, we do have a DSCR option, and you're looking at 13.375 lowest cost option, 12.75 lowest rate option. And last but not least, I wanted to showcase a new product that we just came out with, which is a one rate primary cash out for one unit at a 70. Well, this example here, 70% CLTV, I believe, is the max that we have on this program. The special thing about this program is no appraisal required, right? This uses an AVM only, and it also has reduced costs, and it is offered full doc only. So this is a very good option for a no appraisal and some reduced lender fees as well for this full doc primary cash out 70% CLTV option we refer to as our one rate HELOAN cash out option. So here 9.5% costing you 1 point, one discount point. So those are the options I have for you today, but quite a few options that you can see for the HELOANs, and we do see the HELOAN rates dropping compared to the HELOCs. HELOCs are about 1.5% higher at least for the comparable LTV and credit score, and possibly more than the HELOAN option. And with the HELOAN, we also have DSCR, and we have bank statements and P&L and 1099. So definitely amazing options.
All right, great. I do not see any questions in here. Remember, because it is the day before the holiday, those tuning in live here, we will not be doing a show on Thursday or Friday, which is tomorrow and the next day. So the next time we will see you all will be on Monday. So thank you everybody for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all Monday, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone. Have a great holiday weekend.
Thanks, everybody.
Thank you, everybody.